Market news now. Asian markets retreated on Wednesday morning after 2 days of gains, but the pound enjoyed some stability after the previous day's sharp losses, sparked by Theresa May's Brexit deal being tossed out by MPs. The pound sterling saw wild fluctuations yesterday as it hit a near two-year high on news that the Prime Minister had won a last-minute revision to her agreement with the EU, then tanked to a three-week low as it was rejected later in the day at Westminster. Now, markets in the Far East were on the back foot with Tokyo's Nikkei collapsed 1% to 21,290 points. The Hang Seng slipped up by 0.5% to hit 28,777 points, while the Shanghai Composite was down 1.1%, ending the day at 3,026 points. It was a mixed bag over in the United States. The S&P 500 and Nasdaq rose on Tuesday after tame inflation data supported the Federal Reserve's dovish stance on rate hikes, but the Dow was down as Boeing's shares extended sharp losses from the day before. The Labour Department said its consumer price index rose last month in line with estimates, and in the 12 months through February, the CPI had the smallest gain since September 2016. The Dow Jones fell 0.25%, the S&P 500 gained 0.41%, and the Nasdaq Composite rose just over 0.5%. For more on the market news, we cross to Arabile Gumede at the JSE. Arabile, I'm going to mix two of your favorite things, the markets and sports. Juventus share price rallying around 30% after that hat-trick by Ronaldo last night. What else is happening in the markets?
Yeah, look, Nzinga, that is certainly one to mark for the books, isn't it? A hat-trick by Cristiano Ronaldo, sending the market sky high, now up around 16.35% is the share price of Juventus there as well. It kind of sets the tone for how many other shares linked to football, any other sporting code really could go as well. So a really incredible one and a miraculous one there. Easy to note as well, though, that it did come after the share price had plummeted to some of its weakest in a year as well, after they had initially lost 2-0 to the opponents that they faced last night. That is Atletico Madrid. It will see them gain an extra 9 million euros in prize money as well. That's in addition to the 8 million that they're currently getting for just reaching the last 16. So, of course, more money in the bank. And it just raises the price, of course, of one such called Cristiano Ronaldo. But nonetheless, we head off into the general market space as well. And overall, it all seems to be not as good as Juventus would feel. Some negativity filtering through into some of the market spaces. Let's not forget that Brexit situation continues to be at the forefront of many minds across Europe, including then and in the FTSE market as well there out in London. South Africa one as well, also not doing as great as they would have liked, but not too much by way of negative movement there. Let's unpack those numbers and we'll get into the details in just a bit. So, of course, we chat to Michael Traherne, then Portfolio Manager at Vestec Asset Management, about the markets and just how things have fared thus far. Michael, thank you so much for the time. Slightly negative tinge to the market, but not much to speak about except that everything just seems to be in red today.
Yeah, I mean, I suppose the markets can't go up all the time, and this is the first time for Asian markets that they're red since Friday. So it's been a pretty good run. Yesterday, global markets all over were a lot higher. And that's just the Fed reiterating that they're going to keep interest rates lower for longer. You sort of got this risk off or risk on sentiment, and markets moved higher generally. But today there's not much news coming through.
That didn't say much for the rand, though. One would have hoped that because you had the Fed signaling that rates would stay much lower for longer, we would remain a little more attractive at the very least for that time period as well, and that would boost sentiment around emerging markets. We don't really see that come to the fore, did we?
No, I mean, the rand overall has just got weaker over the last 2 days, even against the pound, which is the pound itself is weak because of the Brexit vote. The rand even weakened against the weak pound. So it just shows you the current risk-off sentiment globally, and potentially investors are starting to eye Moody's announcement at the end of the month. Maybe they're slightly worried that Moody's won't have all positive things to say. So it's always difficult to tell with currencies, but we're definitely on the back foot at the moment, and I don't know how long that will last.
Yeah, if you set the agenda for the next couple of weeks or so, you have the South African Reserve Bank set to come out with their interest rates decision. Then you have, of course, that Moody's announcement, as you've just mentioned as well. It all doesn't bode too well, considering that budget wasn't necessarily the greatest set of information either. South Africa hasn't grown miraculously. Yes, you've gotten 0.8%, but you still have to bail out Eskom, still have to bail out the SABC, SAA and the like as well. It's all still a struggle.
Yeah, so we desperately need growth. It's interesting to note, though, that post-budget, our 10-year bonds actually strengthened. And I think that was where Tito when he stood up, he said, look, we're not going to let Eskom fail, but we're not inheriting its debt. We're going to give them money over the next couple of years to help them restructure. And I think that was a step in the right direction, where government is saying we're going to help where we can, but we still need to be prudent. And international investors appreciate that.
Yeah. How big of a mess is Brexit?
Sure. All scenarios are still on the table. Arabia, hard Brexit, soft Brexit, second referendum, delayed Brexit, no Brexit.
Yeah.
So who knows? So yesterday they voted on Theresa May's plan. This is the second time they voted on it. Again, she got defeated. So this evening they're going to vote on should they leave if there's no plan in place. And they're probably...
Just over 2 weeks to go and there's still no plan in place.
And they've had 2 years to do it. And during the campaign for Brexit, politicians were saying it'll be easy, we don't even need the 2 years, it'll be easy to get traded agreements with all our trading partners. It's proving that what was sold to the people as what Brexit would look like is something from La La Land and doesn't exist. So tonight's UK Parliament will vote, do they want to leave without a deal? More than likely they're going to say no, which then needs Theresa May then needs to go to the EU and say, look guys, we don't have a deal, 2 weeks left. Can we postpone Brexit? Which then it's up to the EU to decide if they will postpone Brexit or not. Yeah. Indications are that the EU will postpone it, but they might have a few strings attached. But even if they do postpone it, what does that mean? UK can't decide what this Brexit needs to look like, and it's because what was sold to the people doesn't exist in reality. So what are they really fighting for? No one actually knows.
In your opinion, is it about time that the population or the people of the United Kingdom finally had their own say again in the scenario? Because you've given them the mandate. You know, the people of Britain gave the politicians the mandate. They couldn't fulfill it. Perhaps go back and ask them, look, this is the scenario. How do you think we should deal with it? Is another referendum perhaps the best chance for them here?
The big question is, what do you put on the referendum? Do you say stay or leave? Which probably doesn't work because that's too simplistic, because that's what happened. The last one was stay or leave, but it was leave with certain conditions where we don't have a hard border between Northern Ireland and Republic of Ireland, for example. There's certain things that the people still want. So how do you structure that referendum to get an idea of what the people want? Before yesterday's vote, it could have been, do you want to stay or do you want Theresa May's deal? Now that deal's dead in the water. So. Yeah, look, I'm glad I'm not a politician that has to make these decisions, but us sitting safely in South Africa, we get to just watch, and it's better than reality TV at the moment.
This is true. Look, I mean, the trade minister keeps saying that he has found a way to sort of close out a deal with Britain, if they happen to get to Brexit. So we'll see how that fares out, and we'll continue to watch that space, of course, and we'll continue to impact markets. But let's talk about South African equities as well then. On the local front, yesterday was the big day with regards to those earnings numbers. Today, however, not so much so, but Growth Point set to come out or have come out with their earnings as well. They've remained stable for quite some time.
Yeah, I mean, they've done very well. It shows what having a quality portfolio does for you, and that quality shines through during these tough times. Stock slightly down today, down about 0.5%. Yeah. But what really caught my eye is I always scroll down to what do their vacancy numbers look like. And over the last year, their vacancy for particularly office retail has gone from 8% to 10%.
Sure.
Now, picture that 1 in 10 office properties are sitting empty. It just shows you how tough things are. If you look at industrial, It's gone from about 4.5% to 5.7%. It's moving industrials also, there's open space. So it shows how tough things are on the ground at the moment. But I think that once the cycle turns, they're well positioned. They've made sure that they've got A-grade properties, and those are the ones that always rebound first when the economy turns.
Yeah, and I suppose that is, as you said, the whole point of getting a good quality portfolio. I guess the difficulty becomes if you were to ever try to expand, you may not have the construction companies to be able to do that, considering the fall now of some of the other ones. How bad do you think that impacts the market? How bad is it then that you seemingly are having the falling of all these construction firms?
Yeah, I mean, when our GDP numbers came out last week, construction was one of the worst sectors, but it had such a small impact on overall GDP growth. And it just shows you how small construction is. We've got someone like Avenge who's still around trading at 3 cents a share, market cap of just over $500 million. They raised $500 million in cash last year. It shows you how quickly they're eating through cash just to keep the doors open. So very, very tough. Construction desperately needs GDP to turn around. And it's because they've got these high fixed costs coming into, it's just expensive. And these guys are basically doing work just to keep the doors open. 1 or 2% margins doesn't leave much room for error. And if something goes wrong, then your project that you've been working on, you get no money out of it. In some instances, you even pay penalties. So not a great space to be in, but I think it's just sentiment, or it's a sentiment in the area where we're not growing in more than 1% at the moment.
Seems like everything is wilting away, but we'll keep the hope and we'll try to find some green somewhere. Michael?
Euphoria 2.0 after the elections.
Let's hope that stays. Hopefully that does come to fruition. Michael Traherne, Portfolio Manager at Vestact Asset Management. That's the state of the market now. Negativity across most of segments today, and of course that negativity coming through as well from Brexit. How do they get that deal sorted? We'll find out soon enough. But for now, that's where the buck stops. It's goodbye from me.